I used to think investing had to be smart, fast, and a little bit stressful. That is the trap. John C. Bogle says most people do not lose at investing because they are dumb. They lose because they make it too hard. They chase hot tips, they pay too much, they panic at the wrong time. And that is the deeper point here. The simple path is often the stronger path. I like this idea because it takes the pressure off. You do not need to become a market genius. You do not need to watch prices all day. You do not need to guess what will win next month. Most people do not need more noise. They need a clear plan they can actually stick with. That is why this book matters. It does not promise magic. It promises a better way for normal people. And for me, that is what makes it feel real. Clarity beats chaos. So the big question is not, how do I beat the market? The better question is, how do I stop getting in my own way? Bogle's main answer is simple. Own the whole market instead of trying to pick the one best stock. That is what an index fund does. It is like buying a small piece of the whole table instead of betting everything on one chair. I think this is where the book becomes powerful, because it turns investing into something plain. You are not trying to be a fortune teller. You are just joining the market's long-term growth. That means more spread out risk, less guessing, and less drama. What stood out to me here is how calm the idea feels. A lot of people think wealth comes from big moves, but Bogle points to steady ownership. Buy broadly, hold on, let time do the work. Here's the weird part. Boring can be smart. In investing, boring often wins because it removes mistakes. No hype, no betting on one winner, no constant switching. If I had to say it in one line, I would say this. Do not try to find the whole future in one stock. Own a piece of the future as a whole. Now here is where the book gets really sharp. Costs matter a lot more than most people think. A small fee can look harmless, but over many years, that little cut keeps taking more and more. That is what I like about Bogle's thinking. He does not just ask, did your investment go up? He asks, what did it cost you to stay there? That changes everything. Because if two people earn the same market return, the one with lower costs usually keeps more of it. A simple way to see it is this. If the market gives and the middlemen take, you get less. Not because the math is hard, because the leak is slow. This is one of those quiet truths people miss. I used to think big gains came from big skill, but often the first win is just not losing money to needless fees. So the lesson is not be cheap in a bad way. It is protect your returns. Keep costs low. Keep the middle out when you can. That is not flashy, but it is powerful. Bogle also makes a strong logic point. Beating the market is hard because the market return gets reduced by costs, trading, and mistakes. Before fees, the group as a whole is the market. After fees, the average investor gets less. That is not a dramatic claim. It is just math. And this is where a lot of people get stuck. They think more action means better results, more trades, more news, more changes. But more action often means more chances to slip. I think this is one of the book's biggest gifts. It helps me respect the cost of motion. Sometimes the best move is not a move. Sometimes the best plan is to stop trying to outsmart every headline. The point is not that no one can ever beat the market. The point is that most people should not build their life around trying. If I were to make this practical, I would keep it simple. Choose a broad fund, keep fees low, and do less. That is not exciting. But for long-term money, excitement is often the enemy. The last big lesson is about behavior. This is where many people fail. They buy when things feel good. They sell when things feel bad. They chase what just rose. They run from what just fell. I relate to this more than I wish I did. A lot of people feel stuck like this in money. And honestly, in life too. They do not need more information. They need steadiness. Bogle's answer is stay the course. Pick a good plan. Then give it time. That sounds simple, But it is harder than it looks because fear and greed are loud. The market moves, the news shouts, your emotions start talking. Here is the real pattern break. A decent plan followed well can beat a clever plan followed badly. So my takeaway from this book is clean. Own the market, keep fees low, stop chasing, stay invested. That is the kind of wisdom that can save years of stress. If you want more book ideas made simple, subscribe to the 5-Minute Shelf. And if this book helps you see investing in a calmer way, that is exactly why I love sharing books like this.